Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today we're recording episode, 214, 215, something like that. And today I have with me Chris Lowell. And actually, I did not ask you if I should call you Chris or Christopher.
I don't care. Pre-COVID days, firm handshake, full name. Nowadays, don't care at all.
Those are bad habits he brings back from his pre-insurance life. So anyway, I've got Christopher or Chris Lowell with me, and I almost always start the podcast saying that I'm very excited today. And in this case, I really am, because Chris, you have a really interesting background, and what you've done with insurance is very interesting. So I think there's a lot to today, basically, and also you are the first podcast guest who I met through my day job, basically a client or a prospect, depending on how you write. We have a contract with the company you were with. We have not done any business with them yet, but basically I originally reached out to you as a prospect and we had conversations on that side, and then now we've transitioned and you're on the podcast. So it's kind of an interesting move in my world. So Chris, so today's podcast is really kind of a career chat, because you've had a different career for most insurance professionals. So kind of give me from my perspective, like if I'm introducing you to a friend or something, I generally say Chris has degrees from Harvard, Northeastern, MIT, a CPCU, experience at Bain in one of the big consulting companies, and then experience both at Liberty Strategy and at Hartford's Innovation Lab. So that's how I introduce you. But I'd love to kind of hear your version of how you ended up in insurance.
Yeah, sure. I'll see if I can do a better job. So thanks for inviting me, by the way, Tony. This is fantastic.
Thank you for coming.
So, I came late to the insurance game. I grew up, coming out of undergrad, didn't know what I wanted to do with my life, and management consulting and strategy consulting is a great place to put someone, smart enough but doesn't know what to do yet. I worked at Bain & Company after my MBA, worked internationally in both London and South Africa. It's a great opportunity. I highly recommend it to everybody to work internationally at some point. And got to see a host of different industries. Actually, never worked for an insurance company while I was there, but looking at sort of platinum mining, gold mining, media and photography, sports, commercial banking, sort of really understanding all the different ways that industries and companies are put together. When it came back to the U.S., I had a small gig. The one thing that you didn't mention, just a year and a half or so at a company called Explorica, where I ran our China business, but I was the P&L owner for it. The business itself was sort of a package tour operator for high school kids to go on 2-week trips to France and learn things. And you need to buy hotels, buses, flights, and food. Right? The internet has hurt the market, we'll say. And I ran the China version of that, which was bringing Chinese students over to the U.S. or the U.K. for sort of glorified sightseeing and language courses. Right? And but the most exciting thing for me was this was my first entree into a P&L or P&L ownership, right? Like I was making the trade-off between what product we wanted to sold and the pricing of it. We want sort of high volume, low margin, or low volume, high margin. Right?
Let me pause you super quick there.
Go for it.
So for the younger listeners, and especially the ones that don't have a business degree, and we have lots of those in insurance, P&L ownership, P&L is a profit and loss. So basically, at some point, if you want to get to an executive role, at some point you have to own the P&L. It's a requirement to grow into the real management roles, especially executive management. So anyway, go ahead.
It's amazing. I try and be as jargon-free as possible, and there are just some things that are just too embedded. So thanks.
This is insurance, and you're a former consultant. Like, there's no way to fix it.
It's tough. Fair point.
That's why I'm
absolutely
here.
Right. Absolutely right. Right. So responsible for actually driving profit rather than an external consultant. That was critical for me, and I loved that. That was a great role. And I wanted to do that on a slightly bigger stage, right? And a friend of mine, just a pure friend, just reached out and said, hey, if you're thinking about doing this and you want to really run a P&L, you should join Liberty Mutual and join their corporate strategy group. You've clearly got the background on corporate strategy and consulting, and you'll springboard into a P&L role into the company. So join it for about a year and a half, jump in. And I talked, when I interviewed for that role, I was really clear, and they were very happy with the idea that I would join. And then a year and a half later, just leave that group and join the, sort of jump into one of the business units at Liberty. 7 years later, I was having a fantastic time and had never left corporate strategy, right? So I got to learn the insurance business across the entire world. So Liberty's got, had operations in every different country. Worked across India, Vietnam, Ireland, Turkey, Russia, China, which is interesting and fun from a international experience perspective, but more interesting for me, which is like, because those are smaller operations, I got to work with the CEOs of each of those operations to really understand sort of what it means to own the ultimate P&L, the ultimate profit statement. And also, because they're lean and scrappy, I had to do tons of hands-on work, right? So if my strategy consulting hat, I said, we need a new sales incentive plan. Well, that meant I was writing a new sales incentive plan, right? Like I'd have to draft it. I'd have to put a stake in the ground and do something, which was great. And I also, came back to the U.S. and sort of saw the claims organization, legal, HR, IT, commercial, small commercial, personal lines, auto, home, right? Sort of every part. Liberty's a pretty broad company, right? So I got to see every part. At the last few years I was there, I had the luxury of sort of crafting a little bit of my own role, right? I still did some of the internal consulting work, but I started thinking about all things future of insurance. 2015, 16 was when it was really clear lots of really interesting things were happening in the industry and in the world, and they were going to affect the industry.
Yeah,
right?
we didn't even have the word insurtech yet, right?
Exactly.
It was happening, and right. We didn't even have a word for it yet.
And admittedly, like there were two major things happening in technology that I think were so hyped that the company needed someone to wrestle these issues to the ground. And those two, I would say, were sort of autonomous vehicles and blockchain technology, both of which, standing here in 2020, realizing that neither has hit even 10% of like its expectation, right? Like,
so that's a whole separate conversation. We could do a second episode just with a couple of other experts to discuss this particular topic. This is a good one. I think that they're both going to have big effects. I think, especially autonomous vehicles, and I think that it's one of those like I don't remember who said it, but basically we always overestimate change in the next 2 years and underestimate it in the next 10. I think that's exactly the case, especially for
Bill
autonomous
Gates is a smart guy.
Especially for autonomous vehicles. A blockchain, we've had several episodes of blockchain. There's somebody out there that has a whole podcast series on blockchain and insurance, and he's on like episode like 60 or 70. I've never listened to a single one. I'm amazed that he still has stuff to talk about.
Right.
I do think that eventually a blockchain that is the ultimate arbiter of truth within insurance could be really, really valuable. It's just we're not anywhere near there yet.
Admittedly, that's what we were trying to help create. So actually, I think you've actually had Pat Schmid on your podcast in the past.
Yep. Nick had him.
And he and I got connected to actually, like, Liberty had created a blockchain. Let me know if you've got noise in the background. Liberty had,
a little bit. We're good.
Created a blockchain solution to subrogation, which is a very insurance focused thing. We don't have to talk about it right now. But it imagined like getting multiple competitors, but multiple players in the industry together and sharing information, non-competitively, but sharing information to save large amounts of money, both banking fees and just not shipping money to and from each other. And it would also probably save a bunch of money on LexisNexis and other types of data aggregation, right? Like blockchain helps create that. And we helped build the Risk Block Alliance, so the actual industry consortium. I think there are now about 40 members, and that was really helpful. Like that was valuable. I still think it's not ahead of its time, but insurance carriers aren't ready to share as much. Certainly not enough for my own taste, but we're getting there.
You come from a different world, I've seen that over and over within insurance. I've heard stories of that over and over within insurance. why don't we have a fully digital accord form, right? When I was a middle market underwriter at Liberty, I don't know if we were there at the same time. Actually, I think we were. So you were at home office doing like serious strategy. I was a middle market underwriter in the Duluth, Georgia office, and wondering why my fantastic UA, who had been there for 30 years and is still there, and she's amazing. Becky, if you happen to listen to my podcast, you really should be an underwriter by now. I don't think you listen to this, but anyway, I spend a lot of time wondering, like, why the heck are we wasting Becky's time entering hundreds of vehicles and all sorts of crap, right? The agent already put it in their agency management system, right? And then exported it to an Accord PDF form, which then Becky and the processing people put into our system. How on earth, why on earth are we not doing this electronically? But the carriers are very reticent to.
I haven't seen the full industry-wide number on this, but rekeying as a loss of time, energy, and cost, which eventually goes back to the consumer, is huge. And it is the most frustrating part, right? Like, we have modern technology, and I could have said this. We could have had this conversation 15 years ago. We could have still said that modern technology will eliminate this, right?
Oh yeah. No. It's a cultural thing. It's the carriers are the carriers, especially on the commercial line side, which is the Accord side, have this perspective that if we make it too easy for you as the broker to get quotes, you'll quote everybody.
Yep.
And that's not good for my business, right? So anyway, I think that we're going way off the tangent here, and
we'll get back to it eventually.
For the listeners, I will link a couple of excellent articles that Insurance Nerds has had on driverless vehicles, and a couple of great articles we've had on blockchain, if you want to dig deeper into either of those topics. And I'm going to make a note to myself to find or maybe the people that wrote the articles for us, and see if we can do an episode with the four of us discussing those topics. That'd be a lot of fun.
Oh, great.
So another question on strategy. So I went through Nationwide's financial leadership rotation program, and one of the rotations that was most sought after was the strategy rotation. I didn't get to do the strategy rotation, but right, I'm friends with the guys that did it during my time. And I, not coming from a consulting background, I was very surprised at how intense that area was, how competitive it was to get in. Everybody wanted to go into strategy, and also how analytical it was. I always imagined strategy as a very marketing. So I always imagined strategy as like sitting around smoking or pipe. I'm exaggerating on that, but discussing hypothetical ideas on the things that we can do and trying to figure out which one to follow. But actually, it's basically like come up with the idea and then find a ton of numbers to figure out whether it would work or not. So how would you describe strategy to somebody who's never worked in the strategy department?
Oh, sure. A couple of responses to that. That's great. One, I think strategy can range from the most analytical, data-driven exercise to things that are a little bit more ivory tower, where you're sitting around with a pipe, right? No smoking indoors anymore, but I get your point, and it's spot on. So I would say strategy is the art and science of allocating scarce resources. Like,
okay, that's the MBA answer.
But I think it's the quotable MBA.
Hold on. Sure isn't that also the definition for what economics is?
Something like that. Don't catch me. So you can't do everything as a company. You simply can't. And there are some things that you are better at doing than others, right? Like Bill Gates, he came up earlier, right? Like, he has enough money, he can do anything. He could create a burger company, right? And flip burgers, but that's not the best use of his time and or money, right? Nor does it actually match the other things that he does. So if you're an insurance company, the core of most insurance companies today, I would say, is underwriting. There are a few that are aggressively service and claims focused, and that's great, right? You might imagine like an Amica or something like that. They're constant, and USAA, right? They're constantly winning awards for their service. But in general, underwriting is probably the focus of what makes an insurance company who they are. So they're great at gathering data, analyzing that data for understanding the risk of someone out there in the real world, whether that be a small business and what they're doing or an individual person, right? And strategy needs to say, your core business, what you do the best then is underwriting and data management. And if that's true, insurance is probably what you're in the business of doing. But there are other things you could do, right? So risk engineering and loss prevention and using Internet of Things and sensors to actually grab more data and massage it in different ways to help customers, that would be a great path to go forward on, right? Versus some companies, some insurance companies are really good, in workers' comp, and therefore, they could move into disability and then maybe even health, right? So it's not about data to them; it's about employees' lives and well-being, right? It's a little bit of a mission definition. But for strategy, you got to figure out you only have a pot of money so big, right? You need to figure out what countries to work in, what lines, what products, what distribution channels, and if your strategy is we want to be all things to all people, you will fail, right? Like that is unacceptable.
In your experience, and I know that you only worked at one carrier, but you might have met other people who worked at strategy in other carriers. Is there a path from, say, underwriting or from claims into strategy, or is the strategy department really former McKinsey, Bain, and Boston Consulting Group graduates?
The unfortunate answer is it depends. So I think the best strategy houses, I think, bring in people from the business, but it is coming in as an underwriter. The programs that happen within large carriers, like I think you are an anomaly, Tony. You're amazing. Like the coming in as an underwriter, they purposely, because it's the most profitable thing, sort of try and breed the cynicism of how do we understand risk, right?
You know what? I have had serious discussions about this. The reason I fully believe that the reason I was successful as an underwriter is because I was at one job for 1 year and at the other one for 2 years. I moved on too quickly, basically, because the best underwriters long term are the ones who are really good about expecting the worst and preventing it.
Yeah.
And I'm the exact opposite, right? I'm a blue ocean new ideas type of guy. I get excited about things easily.
You asked, what is strategy? If I were describing underwriting, I would say in the insurance realm, it's the art and science of saying no, right? It basically says
the sales prevention department, yeah.
Yeah, it is, but for very profitable, meaningful reasons, right? Like 400 years ago, when insurance was coming about, you needed to pick which ships were most seaworthy that you could underwrite as they were crossing over the ocean, and understanding the seaworthiness of a ship and being able to say, I've seen the wood they use on that hull. There's no way I'm underwriting that crap, right? Like that was a real skill. And
I've got to ask, okay, so you came into insurance without an insurance background, and at some point during 6 years at Liberty and 2 years at the Hartford, you're now quoting insurance history. I know you have your CPCU, but I don't think CPCU digs more than a couple of words into the history of Lloyd's. So either you've got your AMIM, or somebody recommended that, or you happen to find it on Amazon. So somebody recommended that you read Against the Gods. So which one was it?
A little bit of A, a little bit of B.
Okay.
But also I would say one of the and amazingly, somehow you asked a question that gets us right back to it, the strategy team or strategy operations, which is many carriers also use their strategy organization or department to bring in talent from the outside that is not homegrown in insurance. And that's how I ended in there, right?
And in most carriers, it seems to be kind of the only area. Like all the other areas are very incestuous.
Yeah,
right?
You're totally right.
Or at the very least, all they do is steal, right? Nobody wants to train. Everybody's stealing from the other carriers.
It's almost like we take this. the training is actually how I learned the history of insurance, because I was trying to teach directly out of MBA and undergrad folks who were joining my team in strategy and saying, let me give you a background. I may have not, I may not have been taught the ships and the Lloyds and the underwriters story, but when I saw it somewhere on probably YouTube, I grabbed it because I thought it actually was helpful to train people. And training and development, some carriers are better than others. Most strategy departments in carriers are pretty darn, again, they work on it, right? Like they try and bring people in and they really work on it because they want people to stay in the industry. Because, the industry, we talked earlier about, at some point during this conversation, I was thinking, we talked about insurance, the insurance agents, and underwriting, and how things have a slow cycle, right? Like things haven't changed in a while. Part of the reason, I realize this is a tangent, sorry about that. Part of the reason for that,
it's my brain works in tangents. That's the only way it works.
Part of the reason for that is, the average age and tenure of the insurance agency plant over the last 10 years has essentially gone up by 1 year every year, because it's not getting a ton of new blood. And so it's people are beginning to age out, but they've been in this industry for now 30 years or so. And there's just a ton of opportunity in the industry. So bringing people in is critical, which is why you rock, Tony.
Thank you. So for the listeners, if you haven't read it yet, Insuring Tomorrow: How to Engage Millennials Within the Insurance Industry was written for carriers, but apparently it's very popular in the broker space. I hear that the author's a little out there, but the ideas are really good. It's very well reviewed on Amazon. Matthew Struck would say the check's in the mail. Thank you for the advertising there. Okay, so 6 years at Liberty, all of them in strategy. You fell in love with strategy at Liberty so much that you didn't go to the business unit like you had originally planned to. So why would you leave and go to Hartford?
Right, great question. Right, so I was thinking about autonomous vehicles, blockchain technology. The other thing I was thinking about sort of IoT and sensors, but also like the insurance industry is primarily a reimbursement mechanism after something goes bad, right? And so in multiple lines and businesses, it's very often a commoditized product, right? And you're competing on just sort of paying faster or with a smile.
So before I get an angry email from Bill Wilson, I have no idea if Bill listens to the podcast. But before I get an angry email to Bill Wilson, insurance is not a commodity. Unfortunately, we sell it like a commodity in many lines, especially personal lines. But it is not a commodity. Coverages matter. Anyway, continue.
Coverages absolutely matter. And I feel like you're going to edit the hell out of me on this.
No. We do podcast. Very little editing.
But you're 100% right. But I think that there are huge opportunities for the insurance industry to step beyond this reimbursement as an entire industry and move to actual loss prevention and loss mitigation by helping people, be a risk management partner with individuals and companies.
100% agreed.
I think it's a great opportunity. Then the Hartford, reached out and grabbed me, and I was very, happy about it. I was happy at Liberty, but it's a great opportunity to build a brand new small business innovation lab at the Hartford. And it's a design thinking, human-centered design focused lab on small business owners. And the most interesting part, another little tangent, which is, if you look,
hold on. My ADD kicked in there. So human-centered design lab focused on small commercial. That's the very lab that you were in.
Yes.
Okay, I did not know that. Okay, so that's very, very interesting. I mean, I'm sure if I looked at my notes from prior conversations as a Jacob prospect, I would have it there, but I didn't remember that. So okay,
and it was brand new, and it was brand new. So I started it.
Awesome.
And I was hired to do that, right? And the Hartford is known for its small commercial business.
The very best. They're the very best. If you ask any agency, they'll tell you Hartford is the very best in small commercial.
Yep, and I fully agree with it. Having been there 2 years, fully agree with it. One of the things that makes them the best, though, is very often focusing on detail that is relatively short term, But if you can continually nail short term and the long term trends don't eat you, then you do really, really well.
Okay, makes sense.
You know, I still think that, you know, there are some long-term trends that need to be addressed. And that's why I was brought in, right? Sort of someone to lift their head up a little bit higher up and say, like, what will the small commercial world look like in 3, 5, 7, 10 years? And how do we test and learn and experiment into those business models, operating models, new product constructs now, to such that we're prepared to make bigger, bolder bets with, you know, with real money and our real robust IT tech stack and bring it into our core. And so I was the test and learn environment at the Hartford.
Awesome. Awesome.
Really cool.
And I really love the fact that the Hartford being the leader in small commercial, and they're not sitting on their laurels. Right, they're actually trying to continue to do it better and better. So that is a fantastic, I think, a lesson for all carriers, for all businesses, but especially all carriers. Just because you're ahead of the game today in whatever you're good at, if you're not investing in it, somebody's running fast to try to catch you.
I would say there are 2 times when innovation should absolutely be your priority, and that's when you are a clear leader and you are innovating from a position of strength, or when you have no other choice and it's either that or bankruptcy, right? Like, so there's a story, and I have no idea if it's apocryphal or not, but like it was like
quick pause. So that sounds to me. So number 1, if you're the leader, right? So the Hartford Small Commercial. Number 2, if you're the last one on the line, Hartford Personal Lines.
So I'll go with no
anyway.
comments.
Go with your apocryphal story. Go ahead.
No, there's a story about.
I'm being facetious a little bit.
There's a story about the founder of FedEx, Federal Express, right? In the 70s, I think his name was Fred Smith. He literally he and only he realized that the company only had like $1,000 left, and otherwise he would have to lay off for the entire company and all the employees. He went to Vegas. And he came back with $1 million. Like that's the story. I don't know if it's, you know, apocryphal or
who knows if it's true. Yeah.
But like he had no other option. It was the end of the business, or put it all on, you know, 42, whatever the hell the number is, and go for it. And I think that's the other time when you need to innovate, which is when your back is against the wall. You know, to use all the consulting jargon, you've got a burning platform. You're standing on something that is not going to be there the next day, and you have to jump.
So the problem with thinking those are the 2 times when you really should innovate is that the majority of carriers are probably not at either of those, right? They're in the middle. They're fat and happy. They're not really growing. InsurTech is looking at them and right, starting to get them worried, but they're not losing money. They're sitting on a lot of capital, and I think they all should be innovating.
I would say every carrier should have something that they do well that is their position of strength, and they should innovate from that, right? So, like one of the reasons the Hartford Steam Boiler does a ton of IoT is because they historically had a sort of a background of devices, mechanicals.
They know what they're good at. Absolutely,
they know what they're good at, right? They didn't try and say, well, let's make the world's sexiest agent portal. That's not really that's not what they're known for, right? And the Hartford is known for small commercial. So innovating from within small commercial to take it even a decade further, great idea, and love it.
Are there other innovation labs within the Hartford other than the one you were in?
Yeah, great question. This was the first one, but in rapid succession, we created a few other, call them, say, innovation activities or departments, right? There is an IoT lab now at the Hartford. It's run by a guy named Dan Campany. He's awesome. I'll give him a plug. But so that's going well. Mine was the only one that was inside of the P&L, right? So I was in the business. I reported up through the EVP of small commercial and personal lines, which means that, you know, we had to make the trade-off of we can have profit or you can have a lab, right? And that's an active trade-off to do long-term thinking versus the innovation labs at most other carriers are in their central corporate strategy group, which means that they could be protected by the CEO. The CEO can say, like, you are my pet team, I'm not going to cut you. But it also means that, you know, when they have to deliver to Wall Street or deliver results, someone's always looking at that pot of money, and it's not a business leader, any business leader other than the CEO that's protecting that group. And that happens.
I'm guessing there's not yet a best practice, especially for insurance companies. And I have lots of conversations with innovation leaders within insurance companies trying to sell them temporary staffing. What the main thing I've noticed is none of them are organized in the same way. Like they're all doing it very differently. So I don't think there's any best practices yet. I personally, I tend to lean towards it should be a corporate function. However, if it's a corporate function, it might be too disconnected from the business units, right? So yeah, corporate function probably better protected from P&L pressures. But how do you make sure that the business units play ball with it and that it understands the business units, so there's cross pollination, right?
Yep. It actually it's interesting. You talk about this being a careers podcast, and I hope it's going to come across in a positive way. But one of the things that's a challenge, and you talked about sort of the sexiness. Everybody wants to be inside the strategy org. When that strategy org is a corporate center rather than one of the business units, it's sexy to get in there, but you have to spend a lot of your energy convincing the business owners, the P&L owners, that you know what you're talking about, that you're not just bringing them pie in the sky ideas. And that's a challenge, right? I think business owners trust people like themselves, and strategists trust people like themselves. And, luckily we're post-election time, but that they don't mix perfectly, right? But I think the most powerful ideas and the powerful execution and the best ways to disrupt and transform the industry come when you can get both, right?
That makes perfect sense. So you come in to run this lab, and I actually vividly remember, and I don't have my notes in front of me, so the conversation might have been about a year ago, maybe a little bit less than a year ago, but I vividly remember making the sales call or the email to get on your calendar and having ask the Jacobson rep, and so how are things going? I remember that you were working on the project. How's the project coming? And you saying it's life, right? And I remember telling you, this is the first. I speak with tons of business unit leaders in insurance companies, with tons of innovation leaders. This is the first at a major carrier. Hey, the project is actually live. A whole new product is live. So tell us about Putty.
Yeah. So Putty Insurance, we launched it probably 7 or 8 months ago. Probably unfortunately the week or two probably before COVID put us all in lockdown. And Putty Insurance is short-term project-based insurance for as little as 2 hours to 2 weeks of duration, focused on part-time handymen, right? So handymen are actually a challenge for carriers and for underwriters in general, because they do a whole bunch of different things, right? They might assemble IKEA furniture, they might put a flat screen TV on a wall, but they might also go on a roof, or they might use a chainsaw to cut down a branch,
the
right?
rates that we would like to charge you for each of those things are radically different.
Absolutely, right? And so if you talk to an underwriter and say, I've got about 100 jobs during the year, 90 of them are IKEA furniture, and every once in a while I go on a roof, they'll say, so you're not in our appetite. Go somewhere else.
And ENS will write you for the roofer rate. Yep. Exactly. Which is a significant overcharging.
Yep.
For the risk that you actually bring.
So we said, but we've already spent all the marketing dollars, at the Hartford to bring this traffic to our site. We have handymen who are trying to purchase insurance, and
you're kicking them out. Yeah.
Right. 90% of the time, they're doing work that we would that we would say yes to, but 10% of the time they're not. So we said, well, instead of underwriting you for a whole year, let's try a project by project approach to it. Let's just underwrite you for the next project that you're working on, right? And we did, right? So we created that product, launched it in March. It's in sort of number of states now. We're building out the technology platform. It's still in beta right now, so we're not aggressively marketing it. But anyone who hears the podcast, go for it, check it out. It's a really interesting product, and hopefully the first of many.
And I love several things about that story. I love that a giant 100. I didn't look at when Hartford was founded, but but 210 years, is that where 210-year-old carrier. A fantastic carrier. I'm a huge fan of the Hartford. But like a carrier that old, and a rather traditional carrier. I mean, maybe not one of the most traditional, but a rather traditional carrier. I love the fact that they managed to play the insurtech game and actually launch a product. And I also love the fact that the choice of why that particular one is, hey, they're already coming, right? The marketing money is already spent. They're already here. And right now we can't serve them. Let's find a creative way to serve. I think that's a great lesson for every carrier. Look at your look at your declines.
Look at your asset. I mean, it's an asset, right? Like the assets of a large carrier is they've got eyeballs coming to them. They have a strong brand. They have decades of data. They may not have the newest, most exciting data, right? So if you're in insurtech, I mean, I don't mean it's old. I mean, like they've been looking at, you might rate dentists based on their square footage. I don't really understand why that was ever a good idea, but but they have that data, right? And if you have that data, try and find what your best, use of it is, and try and innovate off of that.
I love it. I absolutely love it. And since I already put in a plug for my book, I should put a plug for both Rob's and Brian's books. So Insurance Nerds has published 2 books about innovation. One of them, Rob Galbraith's book, is The End of Insurance as We Know It, which is kind of a more academic view from the perspective of an insurance guy trying to understand the insurtech at innovation within insurance and what that might look like going forward. And it's kind of a Hulk, 300 and some pages. It's a great read, but it's a
I think it's right there. Am I pointing to it?
Awesome,
yes,
probably.
Both of them right there.
I don't actually keep copies of our books. I used to actually be fulfillment for all direct orders, not through Amazon. But I don't do that anymore. I've gotten promoted. And the other one by Brian Falchuk is a much easier read, much shorter book. And that one is specific projects that 8 specific carriers, successful innovation products. Putty could have been or might make it on version 2 of the book. On how different carriers innovated. So the theory and the reality of innovation in our 2 books, both worth a read. But I think you're the first like actual innovation guy that comes on the podcast, like actual like spend time in running an innovation area for a carrier.
But I mean, it's clearly it's clearly not me. Like it's the team, right? And so we built a team and hired a team. I would say it actually had like 4 areas of the team that you need to actually build a new product in insurance, right? You need insurance expertise, right? You need sort of like the product underwriting actuarial experts, and we have that on the team. You need designers, right? Like you need people, and I brought in like designers from
UX.
Outside the industry. Yes.
Okay.
UX
yeah.
research.
Bring them from outside the industry. Absolutely.
People. I mean, and it's people who like have as their default especially if you don't know anything about insurance, like your default expectation is, well, of course we'll do it this way, and that might be groundbreaking for the insurance industry.
Yeah, right? So the UX people, get them from outside the industry. Absolutely.
Yeah. So sort of design and UX, the insurance side, and then some business folks, sort of product owner to really manage and push the product, and push it through all of its different stages from ideation all the way out to sort of ideation, experimentation, launch, and maintenance. And then the last group you need is developers, right? You need an agile delivery team to actually build the product, whether it be on sort of a very external modern tech stack like Shopify or some of the things that any startup would use today, or even if it's on some of the larger policy admin systems that the insurance carriers use that they end up spending hundreds of millions of dollars on. Either way, you need development to sort of make that product an actual reality in a system of record, so you can deliver a policy. But once you have that, like that plus executive support, you can you can change the world, right? You can tap untapped buyers and non-buyers.
I think what I'm most shocked at is you were only at the Hartford for 2 years. So you actually put out a product from scratch, from beginning to end, from brand new to the company, no relationships, to you can buy this product in 2 years. That's incredible. It speaks awesome of you, and speaks awesome of the Hartford that allowed you to do that and empowered you to do that. What about the actuaries? So you didn't mention the actuaries in the 4 things needed. Were you able to just borrow actuarial power from the mothership kind of thing? Like just borrow an actuary for a week kind of thing?
Yep, that's exactly what it was.
Oh, okay, perfect.
Longer than a week, but no, sort of actuarial expertise, underwriting expertise, and rating and filing, rating forms and filing expertise. Because this Putty product, it was a new type of both pricing and rating algorithm, and had, in that algorithm had unique aspects that hadn't never really been considered before. Like there's a meaningful, like a 2-hour policy has implications about, what your coverage actually covers. Like,
everything.
Like the systems, policy admin systems don't allow you to do a policy for less than a day. So honestly, secret on the podcast, you're covered for the full day regardless. Right? Like, there's no way for us to write it differently.
Here's what I couldn't say if I was still at the Hartford.
It's like, it's
very interesting.
But I mean, we'll fix that at some point. But right now it's just there are certain things you can't do. So coverage is there for a day.
Okay.
But the actuarial and the rating is really interesting, right? Like short-term rating is it's got a big cushion, and the departments of insurance are okay with that cushion because they recognize that we don't know how this sort of short-term product will really do. And one of the things I'll actually share, like one of the things I was worried about that luckily has not come to pass is by lowering the threshold about how easy it is to purchase the insurance. So if you can purchase it with 3 clicks and a swipe, that allows more people to engage and purchase the product. But in theory, it also allows bad actors and fraud to be done more easily. We haven't seen that yet, which is great. And there are a number of safeguards. All the safeguards are in place around that. But it's an interesting question, right? That I was worried about in the beginning.
Are the safeguards AI, machine learning, or are the safeguards my SIU guy who's been here for 40 years and he's really good at this?
So one of the most important things about getting a product out in any company is knowing your MVP, your minimum viable product. So you do the core of it as fast as possible, and then you add on all the extra bells and whistles. So someday it'll be AI.
So right now it's Rob who's been in the loss control area for 40 years.
Exactly.
Okay, and that makes perfect sense. Absolutely perfect. And you'd be shocked. I don't think you would, but I think the listeners would be shocked if they knew how many quote unquote insurtechs in reality right now, right? They have a really cool video about what like the vision is, but right now they're doing court forms and manual underwriting and manual claims and they're going crazy trying to figure out how to automate the stuff while interacting with a traditional carrier on the back end. So yeah, there's a lot of those. So I'm curious, is this an admitted product?
It is.
Okay.
Filed and
filed and admitted. And did you do it on Hartford paper, or did you have to like build new paper? So existing Hartford paper.
Yep.
Okay. Awesome. Really, really awesome. By the way, since you've given me multiple chances to cross-sell on this podcast, innovation people who I've been leaving voicemails and have not returned my call. If you need a product person or an underwriter or a loss control person or an actuary or whatever, just for a few weeks, and you are finding that your inside people don't want to give up their existing roles, their existing safe jobs, to come do this in a project that might not be here next year, call me. That's exactly what I do. I get you experienced insurance talent, any function, any level, for temporary needs, however long those temporary needs might be, which is exactly why I kept calling Chris.
Love it, Tony. Love it.
That I hope that over time, as the industry matures and people move around a little, and hopefully even we get to the point where some of the larger companies in the industry are more comfortable with letting people who are still at the company come on the podcast. I hope that we'll be able to get many more people with great stories about how innovation is being done and how areas of insurance companies work.
Yeah.
So I've got a question, and I didn't give you a heads up on this one, so we'll see if you have an opinion on it. But what do you think of AM Best's announcing last year and now putting kind of the skeleton on it, or the structure on it this year, that innovation is going to be taken into account in the ratings? How do you think that's going to play out? And how should, right, if I have, I don't know, Mike LaRocco, who's a good friend, CEO of State Auto or whatever, if we have like C-level people at any carrier listening, what advice do you have for them on this coming change?
No, it's great. And it was that was a big announcement. I hadn't actually sort of heard of it before it had happened. But they've given the industry enough ramp time for companies to get ready. I would say the first thing you need to do if you're addressing sort of the AM Best, sort of inclusion of rating in your rating, is figure out which of the three buckets you are actually in. Right? There are some companies who have been innovating for more than a decade, are comfortable with it, and this is positive for them. And to be perfectly honest, I wouldn't think they should change anything other than adding the extra 5% to make sure that they can coordinate all the things they're already doing and make sure that's all relevant and sort of made aware to AM Best, right? I think then there are people in a middle bucket who are like, I think we're doing enough innovation, but I'm not really sure, and they should pressure test their ideas. I think it's the third bucket that's a big problem, which is companies who know absolutely, know and are okay with the fact that they have not been innovating at all, and they're sort of running down a big book on probably a legacy, both legacy tech, legacy business model that is shrinking every once in a while, and those carriers are probably the same carriers that are getting rolled up via private equity roll-ups, right? These the range of players number 20 through 60 in the insurance space won't look the same in 10 years. Many of those are going to be consolidated into, and if you should be self-aware enough, and your CEO absolutely should be self-aware enough to realize that they're in that bucket. And if they don't have a clear strategy out of it, innovation could be one of those strategies. It might at this point be the FedEx type innovation where your back is against the wall. But I think getting in some new blood and bring some people in who know what they're doing in this space and can identify where they should be innovating. Every company, to your point earlier, Tony, every company has something they do well and can innovate from. Everybody has that. And if you haven't found that yet, bring in some innovation people who can help you I'm gonna do the huge plug for me, right? Bring in some strategists who can find what you do well, who are also innovators and can innovate from it, right? Like if you're gonna give me a softball, I finally found my way to it. But, that's what they need to do.
That is fantastic. I was gonna say this at the very end, but yes, if you are listening to this as soon as it came out, Chris is currently available. He might not be available by tomorrow. Who knows, right? This will probably come out on Monday, and he might not be available anymore. Given his resume, I would not be surprised. I don't have any inside knowledge here. Just saying, given his resume, I would not be surprised. But yeah, if you're looking for a deep strategy with impeccable credentials and international experience, and who has executed, I will link his LinkedIn on the show notes. You can just click there and add him and say hi, or you can ask me for an intro, and I'll charge you a 30% fee, and we're good. I'm only halfway joking on that one.
Love it, Tony.
So let me think here. Let me get back on track here. I do think that this is a fascinating time for the industry, and when you first told me a couple of weeks ago that you were no longer at the Hartford, that was kind of my first comment was, I'm kind of envious. It'd be a really fun transition right now. Right, because of your background, like you can go down in an innovation area. Oh, I know what I was going to say. You can go down insurtech. There's just so many different areas where we could really use you within insurance. But what I can tell you is if I got a call 3 weeks ago from one of my clients before we chatted about you having left the Hartford, and they had said, hey, what I really need is an innovation guy who has actually executed successfully within within a P&C company. I think my recruiters would have, like started sticking pins into the Tony Voodoo doll, because right, like that's super hard to find right now because nobody's done it yet. We're all starting to do it.
Yep.
So the fact that
especially when you put, in that job description, when you add in,
must have 10
years experience.
Yeah, that would be the typical, exactly.
10 years of blockchain experience.
I was having a conversation earlier today, a career conversation, and the guy said recruiters who have no idea what they're doing, no offense. And I'm like, none taken, I'm not a recruiter. I work for a recruiting company who is fantastic at what we do. But yeah, your internal company recruiters or HR, right? If you go to them and you say, hey, I need an experienced innovation guy, what they have no idea, right? Like they don't live in the business of insurance innovation, right? They will probably put something. They'll look at the pay band and be like 10 years of experience innovating within a PNC company. Yep. And they have no idea that that's just not the world PNC was in 5 years ago. Right?
I mean, the good news is that the speed and the pace of innovation, even in carriers, is enough that, it's almost like dog years, right? Like the amount of experiences over the past few years, feel like they count for a little bit more, right? It may not always be the most pleasant, and sometimes, you're having conversations over and over again. But they count for a lot. You learn a lot during the process, right? It's a trial by fire, but it's also, what we love, what I love.
So as we're kind of closing down, I'm curious. So I'm assuming you got to go to a lot of conferences, and it sounds like you're a reader to begin with. So I'm curious, for people interested in insurance innovation, people who are already in the insurance space, who are interested in the innovation side of insurance, which will have tons of growth going forward, what conferences would you recommend? What books do you recommend?
All right. My first week at the Hartford, I actually sort of didn't take any time off between jobs, and specifically started early such that I could tell, my boss, by the way, I'm out next week, so I'm going to InsurTech.
You mean InsurTech Connect in Vegas?
Yes.
Oh, okay, perfect.
Okay, I do think, mostly because I think, probably 5 years ago, there were 6 to 10 different gatherings of folks in the InsurTech space. And for better or for worse, it sort of got weeded out. I don't know, maybe they just chose it based on location, but it was a fun place, and it's the most people who come together all in one roof. And
by far.
I actually go, and yeah, by far, so I think it was like 7,000 people last year or something like that. And it's just the atmosphere is such that you absorb so many new ideas that you should just stay up for your 3 days there and absorb and meet all the time, right? And I think that's the way I do it. I would also say that networking on LinkedIn, like in sort of Tony, you're an amazing resource.
Thank you.
I am a distant far behind you, but I think connecting to people and asking them who you should chat with, who are both either like-minded or exactly opposite-minded, to be perfectly honest, are worth conversations. I think you are like you embody in every way the I'm open to a conversation, let's chat about it vibe that the insurance industry needs a whole lot more of, and I'm doing my best to jump on your team to help.
Awesome. So ITC is really the one. I'm surprised you didn't mention InsurTech Hartford, given that.
So InsurTech Hartford's also a great opportunity. And so Hartford being sort of in between New York and Boston, along the corridor. It doesn't get the flow. But I think we're really trying to transform the city into a sort of a startup healthy insurtech world. That's great.
Awesome. So for the listeners, if you have not been to InsurTech Connect, once we're back live in person, it is totally worth it. I made it in 2018. I made it in 2018, skipped it in 2019. I was scheduled to go this year with Jacobson, and obviously it didn't happen in person. But InsurTech Connect is a combination of an incredible conference with a rock concert with Vegas. And if you're a follower of the InsurTech world, you will find all of your favorite InsurTech people. They actually exist in real life. I was there for one day in 2018 because I had another conference that's the next day. I was there for one day, and I met everybody. I met Kari Buhonig. I met Chris from Policy Genius. I met Matteo Carbone. I got pictures with Ryan Hamley. I got pictures with so many people that I've been following for years. It was amazing, absolutely amazing. So I haven't done the whole 3 days. Hopefully in 2021 I'll be able to do that. Also, since I am a CPCU fanatic, and you are a very weird CPCU, you're a CPCU that didn't grow up in insurance. Yeah. So people think that I am a paid shill for the Institute and CPCU Society. I am not. I'm just a fanatic. If I got a commission for everybody that did CPCU on my advice, I wouldn't have to work, but I don't. So number one, what got you thinking about doing CPCU? And feel free to say it wasn't worth it if that's the case. But do you recommend it, especially for people who didn't grow up in insurance?
Yep. Sorry, a number of comments. So one, I love my CPCU experience. I'll give you the true answer of why I did it, however, which was at the time, Liberty incentivized the heck out of it, right? I got 10 grand for completing my designation, right? That'll get me to study, right?
Was it Hawaii or the year after?
Mine was in Southern California.
Okay, Anaheim.
Anaheim.
Hold on. Oh yeah, Liberty, 2014. Okay, got it.
And so I did them, fast. I think companies don't incentivize as much anymore, but I think it was a fantastic decision. I was also on a lot of international flights, so I had a lot of time to just read a book and take an exam when I landed, right? Like just study 14 straight hours and just knock it out. But for me, what it gave me was just the vernacular, and just I'm a big fan of training by sort of omni-channel training, right? Like sort of talking to people, reading books, and sort of taking exams, watching presentations, YouTube videos. Like there's a lot of great content out there. And for me personally, doing it in 5 or 6 different ways finally gets the point across through the thick skull. But these exams tested me on things. Granted, there are many things that are probably Googleable now, right? You don't need to know, what's your limit on unscheduled jewelry for personal lines homeowners, right? But the fact that you have to know that, the difference between scheduled and unscheduled contents, right? The fact that's really important to understand the overall industry. So I'm a big fan of it. I would absolutely do it. And for people who aren't fully in, I think it's actually sort of a enjoyable, gamified, pleasurable way to show your commitment to your employer, right? Like it's for better or for worse, insurance, the carriers and the insurance industry still like people who are, who feel like they're part of the industry. So if you're going to come in, I think it's a good, somewhat safe way to show your commitment.
Fantastic. Chris, it's been a great conversation. I promise you I'd get you out by 6. And it's 5:55. Thank you so much for joining me today. Love to have you back. What I'm thinking is kind of a nerdy deep dive into something, into autonomous vehicles, or with a couple of other guests. I think that would be a lot of fun. So hopefully we have the chance to do that. Thank you so much. It's really been great. It's Profiles in Risk was opened with the idea of having this type of conversations that help people grow their insurance careers. And then Nick had 120 InsurTech interviews. So I am very happy when I can get this type of conversation on the podcast. Thank you very much. Again, I will link your LinkedIn on the show notes. I'll also link the books we talked about and other resources we've mentioned. This one's going to take me a few hours to kind of put all the links together. But really, really awesome conversation. Thank you very much for your time.
Thank you, Tony. This was fantastic.